Welcome back. You're watching The Money Show on ET now, and it's time for our Spend with TMS segment. In the next quarter, we are expecting banks to put up for auction a lot of seized assets, which includes jewelry, cars, as well as homes. Reason being, there has been a rise in non-payment by borrowers, and hence the assets that were put as collateral by these individuals are now seized by banks and they are being auctioned. So there's a learning lesson from this point, and that is only borrow if you are sure of your ability to pay. But on the other hand, of course, as banks put these assets up for auction, it's an opportunity for individuals to bid for these assets. There are pros and cons, there are do's and don'ts, and that's what we are going to be discussing on this edition of our Spend with TMS segment. And I have with me Gulam Zia, Executive Director of Knight Frank India. Thank you so much, Mr. Zia, for joining us today on the show. Do you think that buyers have found opportunity in these auctioned assets, jewelry, cars, homes in the past? Because this is not the first time we've seen banks have these rounds of auctions. Big banks like SBI's have mega auction days as well. Have you seen buyers find opportunity and value in these auction rounds?
Yes, it is. It is full of opportunities. This whole auction, whatever you're talking about, gives a lot of choices for the buyers to explore picking up these assets. And I'm coming from real estate background, so I can convincingly talk about real estate, housings, etc. A lot of people have bought under surfaces and then so on in past and have really enjoyed good deals as well. However, it obviously comes with a lot of caution. I would say you need to really look at all sides, because these deals are not so easy to just go ahead and put up a number for bidding and then take it up. A lot more needs to be done. It's not very simple as it seems. You need to be very cautious while bidding for it. And hence, I would say, since your question was, is that really a good option? Yes, it's a good option, but we need to be very, very cautious while exercising that option.
So why do you recommend exercising more caution when buying homes via auction, as opposed to, buying it from a real estate developer or from another party? Why does buying home on auction require more caution?
Look, because most of these assets are put up as a guarantee to whatever debts that the parties would have taken, and because it's a non-performing asset and hence it is coming in. So likelihood of this property neglected over a period of time exists. So for example, your quality of the asset has to be seen cautiously. All for neglect or for want of regular maintenance, etc., the property may not really be one of the best options at that moment. That's on one side of it, which is the quality concern. On the other side is the whole economic concern as well. There are times when en bulk, a lot of these assets are pushed in the market, and that itself would really bring the value of that asset down purely because of economic perspective. We have seen earlier many banks have put multiple flats in the same building into the market. And that is something which really obviously puts pressure on the value of that property. On the other side, it's also because all of these are as whereas basis deals. So even if there is some legal problem, like for example, if there are some title flaws, and maybe the bank would have acquired or may have picked up this asset as a security, not really doing proper diligence, etc., possible. And such kind of flaws in the titles also will come to the buyer if it is not properly seen through. And then ultimately, because once again, because it's an as whereas deal, the buyer, the bidder who's ultimately picked up the property will have to bear for all the issues that come along with this. So on one side, the chances that you may get a sweet deal do exist, which is also not absolutely every time, because I said multiple scenarios may be created. However, one thing which I would be doubly cautious about, and which is what I told earlier, is to check the legal papers, the titles, and the health of the assets, the quality, the upkeep, the maintenance, and also on the other side, what are the risks or liabilities that are on the property. Suppose last couple of years, maintenance invoice or property taxes, etc., are also to be paid, and you realize later on that you have to really pay all that money. That's a big concern. you would really ultimately end up picking up a property which would require much more out of pocket expenses after you have taken it over. So these are the aspects you need to be cautious about before you bid for any of these.
Okay, let's take each of those topics one by one. Firstly, in terms of having a clear title and documentation, to guide our viewers in a better fashion, would you recommend if you could just sort of recommend an entire checklist of all the documents that the prospective buyer should have in his or her hands before they decide to bid for it? Do you think that it's better that they take legal help as well when getting themselves involved in bidding for a property?
Ideally, a legal help is advised. However, if the asset is not a very high value asset, then the chances that you would hire a lawyer for a small 8-10 lakh rupee property may not really be advisable. Only when you have a high value property, then obviously you can take the help of a legal advisor. However, in case if it's a low value property, then it's a big problem. But even then, since your question was what kind of checklist, I would say you must look at the title certificate or the transaction deeds that could exist for that property. How the transaction would have flown would be captured in the agreement. Like, for example, if the individual who's losing this property against the security that he has kept. So if that person would have taken this, bought it up from a developer, how that title flow has been on that registered document must be seen. You need to also separately look at what are the dues on this property, which is, suppose it's a part of a society or a condominium. What kind of arrears in terms of monthly maintenance charges, etc., are pending has to be seen. And then, of course, the other utility invoices, utility bills, whether there are multiple electricity bills, etc., water connections, or so on and so forth. All those dues are to be seen clearly, to be reviewed clearly. And all these documents are the set of papers that any bidder must look into before really bidding for the property. Now, the chances of, as I said, if it's a high value property, then the chances of the flaw or the title issues could also be higher. So it is highly advisable that you hire a proper a lawyer or a law firm to really review and take you through the whole process. But these are a few things otherwise you need to be cautious about, and kind of a checklist as you asked about, you must look into all that. And yes, one thing which I could not mention was the property tax receipts. So now that at least in a few cities, property taxes are also very individual, connected to each property. You need to also have a list of property tax also to be, if there's any due on property taxes, you should be coming clean on that as well. So these are a few documents you must look at before you bid for the property.
Usually, Mr. Zia, what is, do you usually see that when the bank or the financial institution puts up a property for auction, is it below the generally prevailing market value? Is this something that you usually see, and is it right for buyers as well to expect that?
I would not say so. As I said, it's absolutely case-to-case basis. We have come across a few of very highly spoken about such transactions where the valuation was at least 2 times to 3 times of the market value. It is highly likely that when a certain asset was connected to money taken from the bank, maybe that property was not properly, the valuations or diligences were not properly done. And even otherwise, the markets may also change. When the property was put as a security, the value could have been X. And over a period of time, if the markets have crashed, then the property may have come down. But then bank will have to keep the base price at that number which they're expecting to get from the bidding, the whole bid process. And that is where the chances that the market value of the property less than what is quoted as the base price also exists. So it actually swings both ways. You need to be once again very cautious about a quick review of the market where the asset is existing. Check all the valuations in the adjacent properties, adjacent towers or residential projects, etc., before you arrive at the right value. And also, as I said, the point of maintenance and upkeep also comes in when you're looking at the base price. If the property is not well taken care of, then even if you are looking at it as a sweeter deal, you have to also build in what will you have to spend to really make it up to the acceptable level of quality standards, and that cost also has to be seen. So your point, as you're asking, is it always the case that you get a sweet deal out of such bids? I would say not really. You need to be cautious on the price points as well. If possible, get a proper valuer to give you a number for the bid that you would want to put up as your bid. But then just assuming that you're getting a sweet deal is not really the right approach.